If you spent any time in the UK property investment world, I'm sure you've heard of a strategy called BRRRR, which stands for Buy, Refurbish, Rent, Refinance and Repeat. But just moving forward, we're going to call it BRRRR. And you've also probably heard that in the past, some investors have used this, including me, to quickly build a substantial UK property investment portfolio by reusing the same pot of money over and over and over again, by recycling their money in and out of deals quickly. And by the way, if you're not familiar with how this works, don't worry, because I'm going to run you through a real world example in just a moment. So here we are in 2025, and we've got to be really honest here. The market has actually changed, hasn't it? Interest rates are higher, refurb costs have gone up, and finding good deals is not as easy as it once was, in my opinion. So the big question is, does BRRRR still work in 2025? So let's really quickly break this down for anyone that's new. As I mentioned, BRRRR stands for Buy, which basically means buying a property below market value. In almost all cases, you're buying that property below what it would normally sell for, and often quoted at figures like 25% below market value. And when I tell people that I bought properties in excess of 25% below market value, they don't believe it. But I've done it many, many times. It's all about working with the right type of seller, but we'll come on to that later. The next part of this is rent. This is obviously where you're going to rent that property out at a standard market price normally. So normally you're letting to single family units normally, although obviously there are other more advanced strategies that you could use that could bring in a higher level of income. Refinance. Now you're going to be refinancing this property back at the full market value, ideally after you've added a little bit of value. And in that way, pulling your original deposit money back out of the deal. And you're then going to repeat the whole process over and over and over again. And as I say, I've done this many times. In simple terms, it's like kind of recycling that deposit back out of the deal each time. And when it works, it is truly a really powerful way to grow your portfolio without continuously needing to find new deposits for each deal that you do. Back in the late 2010s and early 2020s, this works incredibly well. Properties were cheaper, borrowing was easier, and refurb costs were definitely lower. But we have to face the reality of where we are today, because the market, as I mentioned earlier, has definitely changed. Interest rates are higher. And at the time of filming, we're currently seeing buy-to-let mortgage rates at around about the 5% kind of region, although you can get deals, but they're around about that, give or take. And so your refinancing of your mortgage is going to cost you more each month in interest payments, and that's obviously going to affect your cash flow. Surveyors have become more cautious with revaluations, and I think that's definitely changed over the past, say, 10 years, for example. So if you're claiming a big uplift in value, which of course you are if you're buying below market value, or if you've added value in some way, lenders want to see some evidence, at least some evidence, that you've actually added that value. And that does not include a new kitchen and a lick of paint. Materials and labour costs are definitely more. A 15 grand refurb a few years ago is probably going to cost you 20 grand or maybe even 25 grand. And having been in that whole refurb industry personally myself, I can guarantee you the cost for day rate now is way, way higher than it was a few years back. Banks want stronger applicants. Some actually want you to have experience as an investor, especially if you're looking at HMOs or if you're refinancing via a limited company. And don't forget, if this isn't your first property, you're going to have to pay an additional 5% stamp duty on any second additional properties and beyond that you may acquire. And so with this in mind, does that mean that BRRRR is actually a dead strategy in 2025? Well, I think you know the answer to that. Absolutely not, in my opinion. Now, to be clear, I am saying it's now more difficult to find that level of quality of deal and to make them stack up. But they're definitely still out there if you know how to find them. And in my experience, the best way to find that level of deal is to go direct to seller. So you got to do some direct to seller marketing, because then you have no competition and you can negotiate a great deal that works obviously well for you, but also can work exceptionally well for the seller if they're after something very specific. And again, I've done that many, many times, but maybe that's a subject for another video. Anyway, there's a really good reason why I'm making this video today. But before I tell you what it is, if you're finding this in any way helpful, it would just be awesome if you could click on that like button down there, because it really helps our channel, if that's okay. So the reason I'm filming this today is that this morning I had 2 of my kind of regular coaching calls that I do with investors. And one of the people that I was coaching agreed to let me share the details of one deal they're just about to do, just so long as I don't give away the address. They were absolutely clear on that, because I actually think it's a really good example of how BRRRR is working well in today's market. So the property in question is a mid-terraced house in a slightly better part of Manchester that the buyer has found using direct-to-seller marketing techniques. And as I say, we're going to cover this in detail in another video. And he's actually agreed a purchase price, a really exceptional purchase price, partly because of the condition of the property, of £148,000. Now, this house, to be clear, definitely needs updating. It certainly needs a new kitchen, a bathroom, plus almost certainly a new boiler. Plus, there's actually a relatively small crack in the outer wall that may well give lenders a bit of a problem, to be truthful with you. It's not a huge issue, this crack, and the buyer has already got a quote to get it sorted. And the seller now just wants this place gone as soon as possible. Now, the realistic budget to resolve all of this, including that crack, is £27,000. And the buyer has an agreement with the seller to resolve the crack first, which is going to make financing a lot easier. Now, to be fair, on the maths, and on top of these figures, let's add, let's say, £10,000 to cover the fees. And so all in all, this is going to cost him about £185,000, give or take. Now, after the work's completed, this place is worth, believe it or not, £260,000. And we spent quite a bit of time this morning going through all of the comparables. That's comparables both in terms of a similar style of property and a recent sale. So we're really confident about that price. But to make triply sure, we phoned an agent and got their opinion, without telling them what the actual address was, of course, because the buyer is direct to vendor. Now, here's where BRRRR really kicks in and makes this an incredible opportunity for this particular buyer. After the work's completed, he's going to be able to refinance at around about 75% loan to value, which will give him about £195,000, which means he's got all his original money back out in that deal after he's refinanced, plus an additional £10,000 in his back pocket, plus essentially a free house that he can now rent out. This property is going to rent for around about £1,300 a month, and he's going to manage it himself, which he's happy to do, which will leave him with just over £400 per month cash flow after he's paid the mortgage and bills, or £4,800 a year, to put it another way, plus the £10,000 that he's pocketed, plus, of course, the uplift in this house over time. Now, as far as I am concerned, that's a fantastic BRRRR deal that definitely stacks up, and I would do and will continue to put money in this guy's bank account like a cash machine forever. Now, of course, the biggest challenge with this type of strategy is always going to be finding those genuine deals, isn't it? The genuine deals that absolutely stack up. Because let's be really honest here, most don't. Most don't stack up. In fact, I think the days of scrolling Rightmove and finding easy bargains where BRRRR stacks up, I think they're largely gone. Because anything that actually gets to market in the first place that's particularly tasty gets hoovered up quickly by clever software AI, which I might be coming onto in another video at some point. No. In my opinion, I think you need to look off market by running some direct to vendor marketing, which isn't difficult to do. And you need to build brilliant relationships with agents, ideally independent estate agents, in my opinion. And you've got to be quick because great deals like this, they don't sit around. They get snapped up quickly. If you don't buy it, somebody else will if they get direct to that seller. But on the upside, many investors have now stepped back in the current climate. They're sitting on the sidelines because waiting for rates to fall, or they're kind of waiting for the market to cool back off a little bit, or they're hearing lots and lots of negative sentiment about landlords. And so this means less competition for you. And if you're willing to get educated, and that doesn't mean spending loads of money on courses, as I've mentioned previously, there's lots of ways that you can educate yourself without having to spend 25 grand on a course. But if you're willing to put a bit of effort in and learn how to do this stuff, put the work in and move fast, there's some serious opportunities out there, especially, in my opinion, if you're buying properties for the long term, if you're buying properties that you're going to keep and hold for the long term. So in summary, if you're new to property investing and thinking about trying BRRRR, it takes a bit of work up front. There's no question about that. And your numbers really have to stack, especially in today's market. But the deals are out there if you go out there and look for them. The investors succeeding with BRRRR in 2025 are educated, they're strategic, and they're treating this like a business. Anyway, if this video helped you understand how BRRRR fits into today's market, that's just awesome. Please consider subscribing because I've got lots more videos like this that I know will help you moving forwards. And by the way, don't forget to download our 50-point checklist, which is going to show you exactly the points that you need to cover when buying that next investment property. Thanks so much for watching, and I look forward to seeing you in the next video.